Welcome, dear traders, it's me, Kate Stichina, and you are watching a recap of the Asian session. Stock markets kicked off Monday on a pessimistic note. Last Friday, Wall Street closed mixed, logging the worst weekly performance this year. On a Monday morning, stocks extend losses. Australian shares have been falling for the third session in a row, hitting a three-week low. And the Japanese stocks also traded in the red. Last week, Wall Street was gripped by uncertainty following a chorus of hawkish comments from Fed officials. Investors were hoping that the regulator would raise the key rate one more time and then take a breather. However, policy reversal scenario looked less likely after the release of a strong non-farm payrolls data. Jerome Powell hinted that there could be 3 rate hikes or more this year, so traders could count only on less aggressive rate increases. The likelihood of a pause is also high, as the Fed might need time to assess the effect of monetary tightening. Central banks across the world are ready to act more aggressively if necessary to cap inflation. Although this strategy is quite effective against inflation, it also increases recession risks, especially amid mounting geopolitical tensions. After the publication of non-farm payrolls, bullish sentiment on Wall Street waned. The US dollar managed to recoup some of its early losses. In the early morning, it rose to 103.60 versus its rivals. In the Asian session, the greenback remained rather volatile, trading in the range of 103.50 and 103.80. The yield of government bonds also grew sharply at the start of the week. As a result, the 103.20 level turned from the resistance level into the support one. Currency investors are anticipating the inflation report, which is on tap tomorrow. The US dollar is likely to climb moderately until the release of this data. It may try to break through 104 points. However, before the publication, it could tumble to 103.50. The yen also traded choppily in the morning because of rising US Treasuries and internal fundamental factors. It appears that soon traders will learn who will take the post of the Bank of Japan governor. On Friday, Japanese media revealed that KAZUO UEDA received an offer to take up this post. The candidate is considered an expert on the monetary policy, and he is a professor of economics. UEDA could become the first post-war Bank of Japan governor from an academic economic background. Japan's government will present its nominees for the new central bank governor and the 2 deputies to parliament on February 14. This event is taking place amid a rather challenging economic situation. For instance, inflation in December reached a 41-year high, approaching the level of 4%. Companies took notice of remarks from the Ministry of Finance and the central bank to raise wages to protect households. So consumer prices jumped in December at the fastest pace in 26 years. For this reason, the new Bank of Japan governor is unlikely to move away from the ultra-soft policy in the near term. However, the new governor may revise the 2013 accord between the government and the Bank of Japan. If so, the current target level of 2% may also change. Following this news, the yen gained momentum at first, and it began trading at a low of 131.30. However, it was moving up during the Asian session in the range of 131.20 and 132.50. Bulls are less willing to open new positions as even after the opponent of the new governor, the monetary policy parameters will remain dovish. Therefore, the yen could also react sharply to the US inflation data. In the morning, the dollar-yen pair touched 132.10. It may retain a bullish bias until the release of the CPI report. The Australian dollar is facing bearish pressure due to internal factors. Stubbornly high inflation is fueling uncertainty and the cost of a company's capital. Besides, the Reserve Bank of Australia also sticks to a hawkish stance like other major central banks. However, none of them have declared a full victory on inflation, and the Reserve Bank of Australia is also unable to rein in soaring consumer prices. This week, Philip Lowe will make an opening statement to the Senate as well as a speech in the House of Representatives on a Friday. The Aussie may recover amid his comments, and the consolidation of the US dollar is another driver for the Australian currency. In the Asian session on a Monday, the AUD USD pair was gradually rising in the range of 0.6891 and 0.6937. It made an attempt to hit 0.6932. However, the risk sentiment was affected by growing tensions between the United States and China. Less than a week ago, a suspected surveillance Chinese balloon entered U.S. airspace. Last Friday, the Pentagon shut down an unknown object flying in the U.S. airspace off the coast of Alaska. For the Australian currency, potential conflict between the United States and China is rather unfavorable, as the yuan is likely to fall and investors will flee from the risky assets. However, its trajectory will mainly depend on the US inflation data. Apart from the US data, there will be lots of other important events. The US and the UK will unveil their retail sales reports. Japan will reveal its GDP figures. And last but not least, several Fed policymakers will deliver speeches. That's all for now. Hit the subscribe button and keep close tabs on the market developments. See you soon.